We finally got a crypto pump. I mean, it wasn't even a real pump. I mean, that's the pump that we actually got. We went from here, we went from 63,000 and we actually touched 60, or we actually touched 70,000. What do you know? We actually touched 70,000. And I don't know about you, but now my entire, we get one pump like this. And now my entire timeline is about how the reason why this pump is happening is because of Jane Street. And how Jane Street has been manipulating the market every single day at 10 o'clock. That's what everybody is attributing this pump to. And that's what I want to talk about in the show today. I want to look at Jane Street and how they've been manipulating the market and how they've been dumping the market every single day at 10 o'clock and how they've been causing a massive crypto dump and maybe even a massive crypto winter. And then I want to show you how because they're now out the market, we're about to get a massive short squeeze. This is a show you don't want to miss because I think that the squeeze that we're going to get is going to be so big that if you hold on tight, you actually can make quite a lot of money or quite a lot of your money back. So if that sounds good to you, finally on a green day, let's get the show on the road, guys. We're a sad bunch of people, right? We get, we've been going down and down for so long. We finally get one green day. And I don't know about you, but when I saw this, I was like, this is us, guys, this is us. Bitcoin coin, Bitcoin 69,000. So listen, if that's you, do me a favor, smash the like button. Welcome back. We've got a big show today. Really, we do have a big show today because we finally got a green pump. Now, we finally got a green day and we got a pump. And, you know, when you look at this pump, I mean, to be honest, if you look at the data around this pump, the data around this pump says, believe it or not, this yesterday was the second biggest green candle since October 10th. Can you believe it, that this bear market has been so brutal, that yesterday's pump was the second biggest green candle since October 10th? I couldn't believe it when I actually saw the data, but the data is actually very real in this regard. And you know why that's so sad? Because if you look at this candle, like, this is nothing. This is like, I mean, the bottom, if you want to talk about a daily candle, you're talking about 63 all the way to 70, so it's a 10% candle. We've had one 10% candle since thing, and if you take it from the bottom, in other words, from the bottom of the day before, because the day before, remember, we had a dump at 62,000, we had a 12% candle. That is the sum total of the entire pump that we've had since October 10th. But it managed to do some damage. It liquidated about $600 million worth of shorts. And the truth is that if it actually carries on, then we can actually get a massive short squeeze, a very big short squeeze. I'm going to show you how that short squeeze actually plays out now, because I actually think, and I tweeted about it, I think yesterday. Actually, no, I tweeted about it a few days before. I tweeted about it on the 21st of February, which was 5 days ago. I said, we're going to see a short squeeze soon. Mark my words. I'm going to show you exactly why I knew the short squeeze was coming and why I still believe that we're in the beginning stages of a short squeeze. But anyway, be that as it may, we are now in a position where we had the pump and everybody is now attributing this pump, guess what, to Jane Street. Jane Street this, Jane Street that. Jane Street is what actually caused the pump. This is a guy that says Jane Street versus no Jane Street. He points to the fact that every morning at 10 a.m. Jane Street sells, and then because Jane Street was served with a lawsuit a few days ago, now they've stopped selling and the market actually started to pump. This guy says Jane Street was running an algorithm that was dumping Bitcoin every single morning at 10 o'clock every day for months, crashing the price, liquidating retail, buying back lower, rinse and repeat. The second they got sued, it stopped. The 10 a.m. dump disappeared. Now Bitcoin just had the best day in months. One trading firm, that's all it took to suppress the entire crypto market for months. Now ask yourself, how much of this crypto price action is even real? How many people get panic sold, etc., etc.? So everybody blaming this on Jane Street. Bark says Jane Street was running an algorithm that dumped Bitcoin every single morning at 10 a.m. every day for months, crashing people. The second they got a lawsuit, it actually stopped. Real Fly says what the scum Jane Street was probably doing was buying puts on IBIT on a Friday and then crucifying when the US was opening. I'm actually going to show you all the facts and all the data around Jane Street and what Jane Street were actually doing. I think the first thing we need to understand is that, firstly, let me start off by saying that everybody's attributing the pump to Jane Street. It has nothing to do with Jane Street. And I'm going to show you that. I'm going to break it down for you, and I'm going to show you how it's the biggest load of garbage that I've ever seen in my life. Let's also understand who Jane Street actually is, because this whole thing doesn't make sense unless you understand who Jane Street is. Jane Street is one of the biggest financial institutions in the whole world, right? You're talking about, it's a quantitative firm and market maker based all around the world. New York, London, Singapore, Amsterdam, etc., etc. What do? Quantitative trading, market making, proprietary trading. They're one of the biggest traders in the whole world. Now they've got thousands of employees worldwide, thousands of employees, thousands of legal people working in Jane Street, thousands of compliance people actually working in Jane Street. As I say, they are one of the biggest financial firms in the world. And the person who's been most vocal about this is ZeroHedge. ZeroHedge is basically saying that they are the guys that have been manipulating the price, and the theory is that they stopped manipulating the price because they got hit with a lawsuit. So let's dig a little bit deeper. What was the lawsuit about? Because if they got hit with a lawsuit and they stopped manipulating Bitcoin, what is this lawsuit about and why are they so scared? Well, the lawsuit is actually not even about Bitcoin. The lawsuit is about the collapse of Terra or Luna in 2021, 2022. And what it says, Jane Street is one of the world's largest quantitative trade firms, and effectively this is about Terra and the fact that they were the ones who manipulated Luna Terra and actually effectively depegged Terra, and that caused the whole Luna collapse and effectively caused the whole 2022 bear market. Now, the truth is that this may be correct. They may have manipulated Luna Terra, and sometimes in finance, you can do these things legally. Because if you find an arbitrage that no one else knows about, you're actually allowed to do it. Now, they may have done some illegal things, and let the court actually do what the court needs to do before we jump into any conclusions. But in the interim, everybody is saying that it's this lawsuit that scared Jane Street away to stop manipulating Bitcoin. And the truth is that if you're Jane Street and you're one of the biggest financial companies in the world, biggest market makers in the world, biggest liquidity companies in the world. In fact, you are the company that does all of the trading for the IBIT BlackRock ETF. Do you think you're really going to stop your manipulative practices because of a Terra Luna lawsuit? Also, there are a lot of accusations that Jane Street actually deleted their entire Twitter account. And if you look at their Twitter account, I mean, it really does look they deleted every single one. I actually follow them. They deleted every single one of their tweets, and they now don't follow anyone. Yeah, but that's what crypto Twitter bros are saying. The truth is, they don't really ever have any tweets. Like, I went back to Wayback Machine. Now, for those of you who don't know what Wayback Machine is, it's a internet site where you can go to, if people delete tweets or if they delete websites, what you can do is you can go back and you can recover or you can restore the previous version of their Twitter or whatever else. And if anybody knows that tweets can never ever be deleted and that they all live on the internet, on an internet archive such as Wayback Machine, believe me, it's the people at Jane Street. They know this. They wouldn't be that dumb to try and delete all their tweets and think that crypto Twitter wouldn't have picked it up. So if you think that this company has now stopped selling at 10 a.m. every single morning, and they've been suppressing the price of Bitcoin every single morning at 10 a.m., and now all of a sudden, because of a Terra Luna lawsuit, they stop their manipulative practices, well, you're wrong. And the data also says that you're wrong, because Alex Kruger pulled the data. He said, it's not true. Everyone says that Bitcoin dumps at 10 a.m. I pulled the data. It's not true. Since January 1, IBIT's cumulative return on between 10 and 10.30 is plus 0.9%. And in 10 to 10.15, it's minus 1. Noisy, but not systematic. So the bottom line is, it's a whole lot of garbage, what people are saying on Twitter, right? Let's look at the reality, though. So what is the reality? The reality is, number one, that everybody's looking for a reason for the pump. And someone says first it was Mert says first it was Wintermute, then it was AI, then it was Trump, then it was Jamie Dimon, then it was the Arabs, then it was the disciples of Judah, then it was CZ, then China, then Trump's kid, then it was CapEx. We're just making excuses. The second thing is that, let's look at what Jane Street actually does and how they are actually involved with IBIT and crypto and what they actually do. So I did some digging, and what I found was that Jane Street are actually the execution partner. There's a word for it. They call it the authorized participant that trade on behalf of BlackRock. So when you buy the BlackRock ETF, effectively what you do is you go and buy a BlackRock ETF share. They issue you a BlackRock ETF share. And the company that actually, if you want to call it, it's like almost the equivalent of a market maker. They're the guys that basically execute and make sure that the ETF is always backed 1-to-1 with Bitcoin, right? So if you buy an ETF share and you give them $70,000, they've then got to buy Bitcoin. Otherwise, the ETF isn't going to trade at 1-to-1. And they call that role an authorized participant, right? And they are the authorized or one of the authorized participants in the IBIT ecosystem. These authorized participants effectively make the market for the IBIT ETF. Now, what have they been doing? When you buy a share of Bitcoin ETF, they expect that money to, you expect, or everybody expects, that the money that you buy let's say you buy Bitcoin ETF shares worth $70,000, and they need to go and buy Bitcoin. You take the $70,000, they're supposed to go and buy Bitcoin, but they don't buy Bitcoin. What they do is they receive the share, and immediately, instead of buying the Bitcoin, they sell the share short. So that means that they've got they take the share, they short the share, and then instead of buying Bitcoin, they buy Bitcoin futures instead. So they're just buying the future instead of buying the spot, which means that there's less pressure on the spot market and it's not moving the market up. And the truth is that that's completely legal. It does have some small manipulation on the price, but not enough to push the market every single day. So, sorry to burst your bubble, but the truth is that it's not Jane Street that has been manipulating the market. I do, though, believe that the fact that everyone is now, I think the fact that crypto Twitter has latched onto this narrative is like the craziest thing I've ever seen. And that's why I tweeted about it last night. I was like, seriously. If you think that Jane Street, this is the reason why Bitcoin's pumping, you've got this game all wrong. But the whole of Twitter was looking for an excuse. And the truth is, I don't really mind that the whole of Twitter was looking for an excuse, because the one thing that they did bring back to Bitcoin was they brought the energy back. Yesterday, everyone started talking. The timeline was full of crypto tweets again. Everyone was talking about Jane Street, about market manipulation. And whereas that's not like the best PR for Bitcoin, that really brings attention back to Bitcoin. And when you get attention back on the asset, you get people going, oh, wow, look at Bitcoin. It's so cheap. And maybe this Jane Street is short. And maybe this Jane Street is out the way. And they're now not going to be shorting. Maybe I should start getting back in. So the one thing that's done is actually bring energy back into the market. I walked through the office today. I saw people smiling again because there was one green candle. Everybody was like happy again. People had blood flow in their faces. It was amazing. It was amazing that actually happened. But the reality is that those people that were celebrating around Jane Street actually missed the real reason why crypto was pumping. And I'll show you, because I went into Frontrunners and I said, guys, everyone's talking about the reason why crypto is pumping, and they're blaming Jane Street. I went into Frontrunners and I said, no, it's different. I'm hearing that an agreement has been reached in principle in terms of the Clarity Act. And so you will remember that the government, or the White House, gave a 1 March deadline to resolve the stablecoin, the Clarity Act thing, and the stablecoin rewards as per the Clarity Act. Now, today's the 26th, Thursday the 26th. Tomorrow's Friday the 27th. 28th is Saturday, and then it's February only has 28 days, right, Titus? February still only has 28 days?
Leap year.
Is it a leap year this year?
Yeah.
Is it this year? Okay, so we have a February 29th, right, this year. But then Monday is March 1 or March 2 or whatever it is, right? So by Monday, they've got to resolve this. They've got to resolve all this thing. Now, what I heard, and I posted it immediately in Frontrunners, which is, by the way, it's our private Discord group where we really post all of our trades and everything else. If you want to join us, link below, join us. It's probably the best money you ever spend, because it'll keep you alive in this market. There's so much going on here. Like, there's Lucky's channel, and he's a day-to-day, minute-by-minute trader, you've got Kapoor's channel, there's so much actually going on here. But anyway, I digress. So what did I hear? It's, pay attention, it's not Jane Street, it's actually the Clarity Act. Now let me show you how I know that it was actually the Clarity Act. One is, of course, sources. Two is look at when this market started moving. Look at the top, the date here. February, I can't move my mouse, but you can see here. See if I move my mouse, February 25th, 2 a.m. That is when the market actually started to turn here, right? Now look here. When did this chart actually turn? Okay. February, hold on. When did this chart actually start to pump? There we go. There, I'm going to put my mouse exactly there. February 25th, sorry, let me put on the candle, 2 a.m. Okay, that is when the market actually started to move. What happened here? Well, this chart started to turn. So the real reason why the market started to turn was because something happened in the Clarity Act, and the insiders on Polymarket basically saw this and started trading it, and the insiders started to trade Bitcoin because something happened when it came to the Clarity Act, and the chances of the Clarity Act being approved went from 47% to 70%. Something's going on with the Clarity Act, and before Monday, we should know whether they've reached the consensus around the stablecoin yield. I remind you that the whole discussion around the Stablecoin Act is something that's, like, in my mind, quite fundamental. And I really hope that Brian Armstrong gets his way, but I don't think that he's going to get his way. I think that this is one of those things that they're going to have to give up. The whole discussion around the Clarity Act is whether users who are holding USDC should receive interest just because they're holding USDC. So if you think about like how a stable coin works, let's use USDC as an example. You holding 100 or 1,000 US, I hope you hold 100,000, but let's just say you're holding, I hope, because I want you guys to get rich. If you hold 1,000 USDC, and what that means is that somewhere there is $1,000 worth of investments into government treasury bills. And that $1,000 is earning 3 or 4%. Now, the whole discussion is whether that money should be allowed to be distributed to you just because you're holding the USDC. In other words, by holding USDC, you actually have a bank account, without actually having to open a bank account, just by holding USDC, whether they should give you the interest or a portion of the interest. Now, the banks say that that is competitive to what the banks do. Brian Armstrong actually is the one that's been championing this, and he kind of says, he came out and he said, look, ironically, if this happened and we had to pay the rewards to the customers, it would make us a lot less profitable than we are today, because today we don't have to pay the rewards to customers, or we're not allowed to pay the rewards to customers, and that's how they want to keep it. But Brian Armstrong says, no, we don't want that. We want, if we're going to get into a world where everybody uses stablecoins, then the incentive is that when you hold a stablecoin, you actually get a higher return than keeping your money in a bank. And so that's the whole argument. That's the whole fight. And to be honest, unfortunately, I think that there's going to be a compromise, and we may lose that in the compromise. And that's actually quite a big thing, because it makes stablecoins a lot less attractive. And in a world where stablecoins are the biggest application of blockchain, moving money across blockchains are the biggest applications of blockchain. This is the big soldier to lose. Like, this is like one of those things that we really want to keep. But I kind of think that is what's going to change. And again, the reason why I think that's so sad is because if you think of stablecoins, the US was absolutely genius when it came to stablecoins. I want to play you through the 4D chess that Scott Bessent and Trump and everybody else was playing. They knew that the dollar was declining. They knew that the US had $38 trillion worth of debt. And they knew that if they carried on this trajectory with this budget deficit every single year, taking on more debt, the dollar would die. The one thing that could save the dollar is if the dollar became the de facto currency of the digital economy. And why? Because very soon we're going to be in a world where there's going to be thousands and thousands and thousands and millions of AI agents. And they're going to be transacting amongst each other. And they're going to need to transact on a certain currency. Now, if that currency becomes the dollar becomes the de facto currency of the AI economy and the digital economy, which is a borderless economy. And that is like the ultimate domination for a currency. And so the US said, hold on a second, if we can own this, and we can regulate that if anybody holds these digital dollars, they've got to buy US treasuries because that's the law. That's what the Genius Act actually said. Then we'll create this amazing demand for US dollars, and we'll also create this amazing demand for US debt, for US treasuries. And that's like the ultimate victory. And so Bessent, Trump, David Sachs. Now you know what the clue is here? The reason why I know that they were very smart in doing this is because they saw what was happening in the AI agent economy. And they realized that the way to win, the way to save the US, the way to save the US financial system, the way to get people to continue buying US debt, even though they have $38 or $39 trillion. How much have they got? Let's have a look here. US debt clock. Let's see how much debt they've actually got. $39 trillion? Almost $39 trillion. Now, who wants to buy the debt of this country that has $39 trillion worth of debt? No one does, unless you're forced to by law. And how do you get forced to by law? Well, you have the foresight to see that AI is going to take over the entire transacting economy, and you try and become the currency of that transacting economy. Now, what's the clue that I have here that tells me that these guys were geniuses and they saw this and that this wasn't coincidental? When they appointed David Sachs, they appointed him as the crypto and AI czar. Now, why didn't they just say, hey, there's an AI czar and there's a crypto czar and they're two different czars? Because they said there's one thing. There's the AI czar, and then we need to own the currency that goes into AI, which is crypto. And that's why they made a crypto and AI czar. And now you can kind of see, when you look at Jeremy Allaire, he says, we're at an inflection point. Now remember, Jeremy Allaire is the founder of Circle, or the CEO of Circle. I don't know if he's the founder. The internet is evolving from information to moving value. Blockchain, stablecoins, and AI aren't at separate ends. They're converging into something much bigger, a reimagined global economy system built natively on the internet. We're entering a world where, in my view, tens of hundreds of billions of AI agents will interact and perform economic functions over the internet. They will need a programmable, he says digital dollar, but I say currency to do this. This is exactly what we've been doing at Circle. So this is why they are really trying to get the Clarity Act through. And I believe that, unfortunately, there's going to have to be some compromises to get it through. But Scott Bessent and Trump want the Clarity Act through because they want to win here, because that's the only way that they're going to get people buying US treasuries. And so that is effectively the whole big play there, and why I think Bitcoin actually moved yesterday. In fact, not why I think, why I know, because the two charts tell exactly the same story. The 2 p.m. on the 25th of Feb, 2 p.m. on the 25th of Feb, you've got the pumps. Very basic, very simple. It's like really simple what's going on here. So where are we now? I mean, so I did tweet the other day and I said we're going to see a short squeeze, and I still think that we're on the cusp of a short squeeze. I think we could be on the cusp of a short squeeze. And when I say that, I don't only mean a short squeeze on Bitcoin. Yes, we're going to get a short squeeze on Bitcoin, but there's a much bigger play that I actually want to share with you guys. You can see that the selling pressure is slightly easing in the markets. You could see that the sellers have slightly subsided. As this guy says, Jane Street didn't suppress the price of Bitcoin. The hodlers did. It's just not that hard. Stop summoning your inner salty gold bug and blaming the manipulators. People sold Bitcoin, and people have stopped selling Bitcoin. This is the chart of people that were selling, and you can see that the selling has now started to subside. Now the problem is that everyone is short. And how do I know that everyone is short? Is because I've been running these positions on Bybit, and you can see that on the positions where I'm long, I've been actually earning interest, right? I've been earning interest for holding long positions. That means that there's a lot of people that are actually short. And so because there's a lot of open interest on Bitcoin, a lot of people are short. Eventually, those shorts are going to close. And when those shorts close, we're going to get a violent move in Bitcoin. It's inevitable. And the reason why I say that it's inevitable is that if you think about a market is like a pendulum, right? It goes from extremely overbought to extremely oversold, from extremely scared to extremely euphoric. And it just swings and swings and swings. And markets never, ever change. That's what markets are. They are mechanisms that oscillate between extreme fear and extreme greed. That's it. That is what markets are. That is what markets actually land up doing. Now, right now, the pendulum is very, very, very extreme in the extreme fear. And how do I know that? Well, I look at fear and greed. I look at things like the RSI. So if you look at the RSI, here it is, the relative strength index. The RSI is on. Okay, that's an hourly. That's probably a bad one to look at. But if you look at the daily or let's even go into the weekly. The weekly is probably much lower. Look at the weekly RSIs. Look how low the weekly RSIs are. The weekly RSIs are stretched to extreme fear. The fear and greed is stretched to extreme fear. The short interest in companies, and specifically I want to show you MicroStrategy because I think this is a very, very, very good thing. If you look at MicroStrategy is now the most shorted stock in the US, the most shorted stock in the world, and the most shorted stock of all time, believe it or not. Okay, so, and the fourth most shorted stock in the world today, in the US today, is Coinbase. What is that telling you? It's telling you that there's a lot of people that are short. 14% of the market cap of MicroStrategy currently sits in shorts. 11% of Coinbase, the market cap of Coinbase currently sits in shorts. That means that is the equivalent of being in a market that's going up and FOMOing in at the top and going leverage long at the top. What happens to those leverage longs? Ultimately, they end up getting destroyed. Well, it's the same thing on the short side. So now you've got MicroStrategy, which is a very, very, very reflexive stock, right? It's the most reflexive stock because it's a leverage bet on a very high volatility asset. It's a leverage bet on Bitcoin, which is a very, very, very high volatility asset. And 14% of the market cap is short. So what is the play here? Well, if we get a green candle, we're going to get a short squeeze. And if we get that short squeeze, you want to be in the most leveraged asset, which is in this case, MicroStrategy. So I took a position yesterday in MicroStrategy and I said, you know what, I think a short squeeze is coming. I just have to be patient. It reminds me very, very, very much of 2020, was it 2021, 2022? And I think there, at one point, there were $3 billion. Yeah, I think there was $3 billion? Yeah. There were $3.3 billion worth of losses on the shorts. Now that's what you call a short squeeze. And then when the short squeeze starts happening and the price goes up, these short sellers have to start closing. And when they close, then they have to go and buy the share, and that pushes the share up even faster. So with that in mind, I took a position on MicroStrategy at $135. Let's see how that actually plays off. If we get a pump in Bitcoin, we're going to get a short squeeze, and then I'm going to make a lot of money on this actual trade. You can actually take these trades on the normal exchanges. You don't have to go to your broker anymore. Most exchanges actually support leverage stocks. IBIT, Blofin, links below if you want to play that game. Also, so that's the MicroStrategy story, and that's why I actually took a position on MicroStrategy. I mean, I heard this, and having been to Mar-a-Lago, met Eric Trump, like, this is so funny. Like, you got to hear it. It's so funny.
We were sitting at the patio in Mar-a-Lago, Michael and I, and we were kind of geeking out, going down this rabbit hole. And he goes, Eric, you need to take this property. And Mar-a-Lago has no debt on it. You need to take this property. You need to mortgage it right now, and you need to go out and buy Bitcoin. By the way, he was dead serious, right? He's the guy that goes out and says, sell your liver and kidney and buy Bitcoin. And by the way, he's probably also right. Bitcoin's amazing. You and I are in this ecosphere.
Can't believe it. Imagine going
every single day. I have friends of mine coming up and
imagine going to Mar-a-Lago, to like Trump's house, and saying, look, you need to mortgage Mar-a-Lago, and you need to put your money into Bitcoin. He would have been liquidated. Maybe the bank would have been liquidated. I don't think it would have been Trump liquidated. All right, so what's the play here? What do we do? If you believe that we're about to get a short squeeze or we're about to get a pump, you want to be in the assets that are the most shorted. And the reason why you want to be in the assets that are the most shorted is because when there is a green candle, those are the ones that are going to have the short squeeze. And when they have a short squeeze, that's going to give you much higher, much faster leverage upside on the way up, right? And so in stocks, I've taken positions in Coinbase and I've taken positions in MicroStrategy. But you can do the same thing in crypto, right? So if you go to Coinalyze, what Coinalyze actually show you is they show you the open positions and the funding rates and the open positions in terms of how many of these, of which of these stocks are the most shorted stocks, right? So, I'll give you some examples, right? Like BCH has a very high funding rate, meaning that there's a lot of people that are short, and it hasn't yet spiked. Telegram, Atom, Zcash, all of these are basically tokens that have a lot of people that are short, and that they haven't actually pumped yet. But when they do, then people are going to have to short cover. And I kind of suspect that that's what happened yesterday. Like, there's no way in the world that people were going to buy DOT. But if you look at DOT, DOT's one of the biggest movers this week. Why are people buying it? Well, no, it's actually they're covering. I think they're probably covering shorts, and that's basically the strategy. So if you want to play that game, and I do think that's a good game to be playing if you think there's going to be a green candle, find the tokens that have the most amount of shorts open interest that you think will bounce, and when they bounce, just cover it. Just close your position. I did add also. I mean, in full transparency, I did actually add. You'll see it. Here it is. Where's my? Here we did. Yeah. So I actually did add SUI to my portfolio yesterday. I think did I post it? Yeah, I'm sure I did. Hold on a second. Oh, I thought I posted it. Oh yeah, I did. Here we go. So I added SUI yesterday to the portfolio. You can see it over here. I took it. The position is slightly down now. I'm not worried about it. The reason why I like it is because I think that SUI is one of those like tokens that's just below the majors, but it's not a low, like a minor. I think it's been really, really hit hard. Like SUI at 94 cents. Like, it's just been really hit hard. And I also listened to this podcast, which I highly, highly, highly recommend you go and listen to. It's on When Shift Happens, and it's this one here with Costas.
10 years ago, we believed that in 2030, 2035 will probably be the doomsday. Something is gonna be produced by humanity that will break the cryptographic algorithms. If you ask me now,
so I'll give you some insight as to who this guy is. His name is Costas. He is one of the lead developers and one of the founders of Miston Labs or of SUI, and he used to work at Facebook. In fact, I think he built the encryption for WhatsApp. He's a cryptographer. He used to be at Facebook, and now he's one of the founders of SUI. And I just listened to him talk about the cool stuff that they're building and how they're building it and how they're addressing quantum computers and whatever else. And I was like, you know what, like 90 cents. This is like, these people are the real deal. You know, maybe it's not going to pump tomorrow or the next day, but I'm at 90 cents. I'm pretty comfortable to add some to the portfolio. So I added some yesterday. Yeah, I mean, if you want to follow my trade, you're welcome to do it. If you don't have any exchange, there's links below which give you amazing founding offers, etc. Also, just a quick reminder that today ZachXBT is going to release his investigation about which company has been involved in whatever shenanigans they've been involved. I did say that everybody could join the news terminal for free. I mean, for those of you who don't know what the news terminal actually is, it is an AI that has gone through thousands and thousands and thousands of news sources. And when there is a credible news source that posts, it actually posts it to this terminal in a matter of milliseconds, right? And what it allows you to do is it allows you to trade directly from the terminal. So I want to actually show you kind of like how it works. So that's the news terminal. Now you can see there, news came out about Trump. Now if I want to buy the meme coin, I basically click that button. That's it, my order is placed. And you'll see in a second, it will appear here. Once it's processed, it will appear here. And it basically allows me to trade in milliseconds when news comes out. Now, the trade here is when ZachXBT actually releases the news, we will see we'll actually see that my trade was placed in milliseconds. Now it's just posted back here to the terminal. If I want to close it, I can close it here, or I can just close it here. Bang, I'm short. There we go. It's gone. That position's gone. There we go. You saw my position just disappeared. And you can do that in a matter of milliseconds. So why am I telling you this? Because later, ZachXBT is going to come out. That piece of news will be here. And then you can go long short whatever token is the token that's actually there, and you'll end up making money. If you want to join that, there's a link below in the description. I'm giving everybody a 30-day free trial on this news terminal. Literally 30 days, cancel it after 30 days, absolutely free, because I want you guys to experience how much fun this news terminal and how much fun news trading actually is. Listen, guys, been a fun show. Been good to do a fun show on a green day, but it's time for me to go. I'll see you guys again tomorrow. Until then, trade well, my friends.